Welcome to the channel. Don't forget to like and subscribe. Today we're going to talk about understanding selling and buying exchange rate. If you have ever exchanged foreign currency for your country's currency or vice versa at a bank or money changer, you must have heard the term selling rate and buying rate. Even though you don't know much about these two terms, at least you have definitely come across these terms. Perhaps you have thought that there is only one exchange rate. For example, 1 USD amount to 14,000 Korean won. This kind of announcement of the exchange rate that we hear a lot from various media. Apparently, what is meant by the exchange rate is not only that. There are three prevailing exchange rates, namely the selling rate, the buying rate, and the middle rate. The exchange rate is closely related to the exchange of foreign money in the bank or at the money changer. To make it easier to understand, the selling rate and the buying rate are always interpreted from the point of view of the bank or money changer, not from our point of view as exchanger. According to Paul R. Krugman and Morris, the exchange rate is the price of the currency of a country measured or expressed in other currencies. Meanwhile, according to Salvador, the exchange rate is the price of a currency against another currency. Simply put, you can interpret it as follows. The selling rate, your country's currency, to foreign currency, is the rate used when the bank or money changer wants to sell foreign currency to us, or if you want to exchange your country's currency for foreign currency. Or it can be interpreted that the selling rate is the selling price of currency or forex by the bank or money changer. The buying rate is the rate used when the bank or money changer wants to buy foreign money from us or if we want to exchange foreign money for our country's currency. Or it can be interpreted as the exchange rate that has been applied by the bank when purchasing foreign currency. For example, let's say Anna plans to take a vacation to Austria. Because Austria is a member of European Union, the currency used is euro, so Anna had to use the euro currency while there. So Anna goes to the bank to exchange the amount of money she has for euros. At the time of exchanging the money, the selling rate of the euro was 1 euro can be exchanged with 10,000 of Anna's country currency, while the euro buying rate 1 euro can be exchanged with 9,000. Because Anna wants to exchange her country's currency for euros, the selling rate is the reference for her calculation. In addition to the selling rate and the buying rate, there is another type of exchange rate, namely the middle rate. By definition, the middle rate is the exchange rate between the selling rate and the buying rate, the sum of the buying and selling rates divided by 2. In general, the selling rate is higher or more expensive than the buying rate. Forex traders take profit margins from this foreign exchange or forex exchange difference. When you see a list of foreign exchange rates in newspapers, TV, or on the internet, and there are no details of the buying and selling rates, it means that the exchange rate is the middle rate. In general, transactions in the territory of a certain country use that country currency. Usually, it is regulated by the central bank. Parties who trade goods or services domestically may not refuse transactions in the currency. The issuance of these regulations cannot be separated from the increase in transactions using foreign exchange, especially dollar. Obviously, this is not at all profitable for a country with currency weaker than dollar. This situation, if left unchecked, will impact the country's economy, and it does not rule out the possibility of an economic crisis when left unchecked. Things related to exchange rates need to be thoroughly understood. For those of you who frequently travel abroad or conduct transactions in foreign currencies, usually because of the lack of information obtained about buying and selling rates, not a few are mistaken in understanding the two exchange rates. By understanding the explanation mentioned, hopefully the error in distinguishing the selling rate from the buying rate can be avoided.